India's startup world is facing a funding crunch, and the core of the problem is West Asia. As geopolitical tensions escalate in the region, investors are pulling back. Large deals are drying up, deployments are being delayed, and capital is becoming harder to come by. So, what's really going on? Between 1st March and 15 June 2026, startup funding in India fell 43% year on year from $13.7 billion to just $7.81 billion. That is according to data reviewed by Business Standard. The biggest damage was seen in late stage funding. Funding there collapsed 61% to $1.5 billion from $3.8 billion. Seed stage funding also took a beating, dropping from $714 million to $292 million. Early stage startups, however, held up relatively well, attracting $1.96 billion in funding, down from $2.01 billion a year earlier. Analysts say the West Asia crisis has increased uncertainty across global markets, dampening risk appetite. Venture capital firms are getting more selective. Many are delaying investments and preserving cash for existing portfolio companies. The impact has been especially palpable among Gulf-based investors, many of whom had been increasing their exposure to India. Several have now slowed their timelines or paused commitments altogether. Then there is the rupee problem. The currency depreciated to 94.8 against the dollar by the end of March, making it difficult for global investors to guarantee returns. Hence, many are choosing to wait it out before deploying fresh capital. But not everyone pins this entirely on West Asia. Some argue it has simply accelerated trends already underway. Structural shifts are happening in the startup ecosystem. Many are becoming more capital efficient, focusing on profitability over growth, leaning on debt over equity, and eyeing public markets instead of staying private. Meanwhile, global growth capital is migrating toward AI and foundation model companies in the US, further squeezing India's share of the pie. Despite the gloom, investors are not stepping away from India altogether. They're just getting more selective. The sectors drawing attention are AI, defense, deep tech, semiconductors, space tech, cybersecurity, and advanced manufacturing. Analysts say money is shifting away from cash-heavy consumer businesses toward strategic technology, which is seen as more resilient in uncertain times. So it is not just war alone. The headwinds hitting India's startups are coming from multiple directions at once: geopolitics, currency pressure, and a global capital shift toward AI. And with no signs of uncertainty in West Asia easing, the startups that survive may be the ones built not just for growth but for resilience. Follow Business Standard for more stories.